Okay, that is Mr. Bijli. I mean, he's optimistic and saying that even at 15%, that's 1.5, I mean, they're okay. And the business should be able to do well. We have Abneesh Roy of Edelweiss Securities and Karan Taurani of Elara Capital joining us on the phone line to take this forward from a stock perspective. Gentlemen, thanks very much. Good morning. And good to have the both of you here. Now, the positives are clear. You know, it's not just PVR, but Inox as well. Both are strong franchises. Debt levels are quite low. Both have cut costs quite a bit. And as you heard Mr. Bijli saying that even at 15%, they should be okay. Now, you've got to contrast that with what actually happens when, come the 15th of October. There is, of course, also, a lot of this will depend on what states allow cinema halls to do. So, how is the risk-reward skew right now? Abneesh, why don't you come in here first from a stock point of view?
Space from longer-term perspective, if you see Sri Lanka and South Korea, there the box office response post-opening up has been decent. While in high COVID cases, market like US, it has been below expectation. So India will also be somewhere similar to, I think, US first 2-3 months. Anyway, November only we'll see the first new content coming in. I think 83 movie and Suryavanshi, these are the two big ones to track. And Maharashtra market, when it opens, that's very critical because Maharashtra is 20% of the market. So I would say near term, whenever big states open up, the stock can again see positive trigger. If you remember, PVR is still, even after today's up move, is still almost 35% from its peak level. And even 1 month high, if you see 1460, it is way off. So I think near-term triggers can be there. But yes, from a business perspective, things will be challenging. Consumer confidence would need to be built up. Plus, promotions would be there. Advertising will see significant headwinds first 3-4 months. Plus, F&B also, there will be challenges because a lot of the family outings will be a bit limited. So I would say that near-term triggers will be as more states open up, the stock can go up a bit more. But from longer-term perspective, we continue to remain positive on the space on both PVR and Inox because only 10,000 screens are there in India and only 3,000 are multiplex. I think consolidation will happen in favor of multiplex and overall screens will also continue to increase in India. Out-of-home consumption, clearly this is the main thing, main avenue for most Indians.
Karan Taurani of Elara Capital is also here in this discussion. Karan, just drawing parallels with a country like United States, which has allowed multiplexes to open, and like India, United States also has a very high COVID count, at least, but US has not seen a big pickup in, in footfalls or in terms of occupancies, despite the cinema theaters being allowed to operate. Do you expect the same thing to happen in, in India as well? How do you see the next few months and what are the big risks? We've all been talking about the positives, but what are the risks which lie ahead?
Right. Thanks, Reema. Good morning. So firstly, to talk about the point of US, I think US, reporting dismal occupancy numbers is more to do with the kind of high screen penetration what they have versus India. Because occupancies even pre-COVID era have been very depressed over there. And I think because of COVID, it's become further low. It's almost about 70-80% lower versus pre-COVID levels. So it's also the screen count and the kind of people there. And US, as you know, in terms of consumption habits, they are the first movers in terms of this OTT consumption. And even generally, overseas box office collection of Hindi films generally have been below par in US. So that's the update on US market in terms of why they are underperforming. Now, in terms of the key risk, what I feel for the India cinema would be, I think, obviously, F&B, audience, advertising, these are obviously risks which are there. But I think one major risk for the India cinemas is the staggered opening. And until Maharashtra doesn't open up, we will not going to see large films go to come into cinemas. And as Mr. Bijli also pointed out, unless there is no new film, people will not flock into cinemas. So I think that's one. And the second part is, again, an extension of this first risk, which is the content part. So we are expecting that during Diwali, we'll probably have releases of the Hollywood films in the likes of Tenet and the Bond film, which was supposed to release globally during Diwali. And I think Hindi films will only come during Christmas because I don't see Hindi films coming up front. And, I think they're going to test the market with Hollywood films. We're going to see how the response is in terms of occupancy, in terms of people coming, in terms of the F&B and other things put together, what is happening. And then I think Hindi films will come in probably last week of December. Now, coming to the point in terms of major risk, obviously there have been risks which have worked in favor of cinemas. So one story is consolidation. That is a very good thing. Until this pain lasts, the consolidation will move in favor of PVR, INOX. They are very well funded. They've got lower debt equity versus global counterparts, so they are like sufficient over there as well. With conversation with mall developers indicate that most of the mall developers will allow a rev share. Until 4 months back, we had no clarity on that. But currently, because mall developers also want footfall, and footfall will not come until cinema opens up, so they are going to mostly move to a rev share. The other risk which is moved in favor of cinemas is basically the content pipeline. So shootings have started for Hindi films, actors have gone abroad, shooting has started in Bombay as well. But still, one major risk which remains to be is the terms with the producer. Now, if you are a producer today, if you're a producer of a large film like for a Suryavanshi or 83, if you are going into cinemas, you definitely know that your collections are going to take a hit by 40, 50, 30%, whatever the number be, whenever the film releases. Now, as a producer, you would want some kind of comforting factor from the exhibitor in terms of the terms getting negotiated. So you will either ask for a higher distributor share. Distributor shares have been fixed at a certain rate of 50, 37 and 42% basis annual average weekly. So you will ask them for a high distributor share, or you will ask them for some kind of lowering of the windowing period of the movie going from cinema to OTT satellite, and that will fetch you higher returns in terms of the whatever digital rights which you have. So I think these two terms are a big key monitorable, and they may have an impact only in the near term, but the medium to long term repercussions of these terms changing and these terms going in favor of the producer can have a big negative long term standing. So definitely, I have a structural positive stance on cinema, and I have a buy rating on INOX. I have an accumulate rating on PVR. I do expect the prices to move up another 15-20% from current prices. But I think the pre-COVID levels will only come once these two terms, clarity emerges of these two terms in terms of how things are going to pan out and how the producer, distributor, and the exhibition ecosystem is going to work towards this situation. Because definitely, the collections are going to take a hit for the next 6 months when cinemas open.
Abneesh, in a way, I mean, you will see only a real turn and occupancy returning back to somewhere even close to normal, not normal, but somewhere close there, once we have a vaccine, right? And that could be Q1, Q2 next calendar?
Not necessarily. If you see in terms of malls, already in the big cities, we are at 30-35%, and in the smaller cities, it is 65-70%. If you see QSR, takeaway plus drive-in and all that deliveries, in fact, ahead of the pre-COVID. And now restaurants are also getting open. So I would say in most of the consumption, if you take paint, if you take retail, jewelry, USR, the demand recovery has been better than expectation, and FMCG also. So if multiplexes are able to demonstrate the safety aspect, plus if one or two hit movies are there, and normally we always see after a lull, a hit movie really brings the footfall. I would say necessarily people will not wait for vaccine, because one, there could be a fatigue factor. If you see already in most of the restaurants, there is a line outside just for the delivery takeaway. Now people are flying out also. We are seeing all discretionary consumption come back. So I think it's a confidence building measure, secure in terms of security and initial promotions to the customer that we are offering you a good deal. And plus third, one big hit movie has to be there. So I think vaccine necessarily people would not wait, because people are bored and they do understand that these organized retailers do have very high safety practices also.
Karan, you heard Mr. Bijli talk about that even at 15%, they'll be okay. What kind of numbers are you building in? I mean, you said new movies will only start coming in by sometime in November. So with the fixed cost structure having come down, at what occupancy level do PVR and INOX start making money?
So basically, if you look at the pre-COVID times, I think the occupancy levels for something like an INOX for a break-even point was about 20-odd%, and something like a PVR was almost 22-odd%. But given the kind of cost-cutting measures they've had at various levels, this break-even point has come down by almost 3 to 4 percentage points. So I guess 15 to 18% is a good to go number in terms of break-even. But again, I think this year what we're expecting, on FY21 basis, we have forecasted an occupancy of about 11% for INOX and about 14% for PVR. This is annualized. This is also including the 7-month shutdown which is there. So basis that, I think the whenever the cinemas open up, say November, December, onwards, the occupancy picks up. We are also expecting the occupancy to be at about 15 to 20% kind of levels, very similar to what he has pointed out.
Abneesh, Karan, thank you very much for joining into the discussion. Stocks are very excited today, but remember, there is always a risk that other states, like say Delhi, which is yet to take a call on whether it will allow cinema theatres to open, if they take a call like Maharashtra and push the decision forward, it could act as a bit of a near-term pressure on these stocks. Right now, as we speak, stocks are up 8-9%, but they're still off 40% from their 52-week highs. We'll slip into a very short break.